Good afternoon, traders. Wednesday, the 9th of November, and we have the 45th president in power in the US, and basically we have Brexit number 2. What we were talking about the other day, and I did a video for our protege group last night, and to be fair, this is where we felt that the market may have more upside in return, but that was the initial impact on the results. But it's the market's coming back on itself. So all those traders from Protege and Phoenix Blue, I want to say well done and commend you for staying out of the market, because we're going to have a look at the charts in a second, and literally to have profited from this kind of market, you'd have had to have been in and out. Where do you take your profits? What was your reason for entry? You know, that it would have been a gamble, if I'm brutally honest. I think if anyone was trading this market last night, it would have been a gamble, and they'll have just bought on the sake of buying or sold on the sake of buying. So for all the Phoenix Blue guys out there, well done. And you know, for me, for the rest of the week, I'm going to be sat on my hands as well. I'm not trading the rest of the week, and we'll have a look and discuss why. Okay, so obviously Donald Trump, he proved everyone wrong. He won a couple of major states that no one thought possible, and now he's in power. So let's see what's actually going to happen. Well, let's have a look at the dollar index. It's a good place to start. So the dollar index. Here's our daily candle. Look at the wick on this. So what actually happened through the state of play was that initially, as the results were coming in and being countered, Clinton was showing as a leader, was in front, and we saw that the dollar was strengthening. And then as time was going on, the polls were proving to be more inaccurate, and it was looking like that as each hour passed by, because I stayed up for the entire event, which is why you're having an afternoon update and not a morning update, so my apologies for that. But the good thing about this is we're actually seeing how the market's correcting, to my surprise as well. With Trump getting in power, I was anticipating that we'd see a sell-off in dollar, a sell-off in stocks, and a rally in gold, and a rally in yen. Now, that's what happened initially, but if we look, price is pretty much back where it started on the dollar index. You can see it came right down to its good technical level down at 96.20. Did push through it a good 40 points before then coming back. So if you were staying up and you wanted to trade it, then potentially you could have dropped down smaller time frames, look for a change of cyclicity here, the retest of the trend line, nice fib level, nice structure. It was a great area, but at the end of the day, the momentum it went down there could have quite easily kept going. So it was one of those, I just want to sit and watch and see how it plays out, let the dust settle, and I'll come back next week with ideas on where I see the market. I've got a lot of reading to do this weekend. So euro dollar, obviously we're going to have a similar image to what we saw on the dollar index, and again, this is one of those, the euro was strengthening massively last night as it looked like Trump was getting in, and then as the results were announced and he was confirmed president, literally since then the dollar's just been appreciating. So my consensus and my theory was wrong initially. Then I was thinking that the dollar would sell off, and we would potentially see that further sell off, but it looks like it was very short term. Dollar yen. Now this is a very interesting market for us. We were watching this key area of around the 100, see what happened down here. The market did come down, test this area here, but there was no way in. I think our next level of interest now is going to be this sort of 106.60 area. If we get a break above there, then lovely. We've got room all the way up to about 111s. So buyers came in very aggressively for the dollar when the index hit that 96 barrier, and you see that because it's cross-reference lovely with the dollar yen and euro dollar. But again, there was no real way in trading this. Gold, this was my pick of the charts. This was the one that I actually wanted to trade if I was going to trade. And I was looking at, there's a short-term trend line through here, and the market came down to it, and I was watching this on the 1 hourly chart, and I was looking, but as you can see, it's pretty much come back to where it started. And the break of that high there would have been nice. Take it up through the 1300s, but look, it's just respecting it. It's coming straight back down. So in essence, I'm quite glad I actually didn't take that trade. So now we're going to have a look at the indexes. So we'll start off with the S&P 500. In anticipation of the election results, what happened yesterday is there was a sell-off. Trump was announced, and you're seeing the scenario again, aren't you? Big sell-off in equities, only for it to basically find the 2050 or the 618 nice structure area. The plunge protection team came in and started buying up the S&P quite aggressively. But this has happened across all equities indices, I should say. If you look at the FTSE, you look at the NZDUSD, US 30, look at the Nikkei, which we're going to look at next. So, after big news announcements like these, and you see what's happened with these candles, it's very, very difficult to trade because it just puts the context of the rest of the market out of place. So you're going to need a few days of seeing how the dust is going to settle. Are we going to see strength of the dollar? Are we still waiting for that Fed rate rise? Is that what's bringing the dollar strength back? Are we going to see equities rally on throughout the rest of the year like we'd potentially expect to see with the Santa Claus rally? These are things that we're not really going to know. And yes, you can argue that technicals have played out to a certain extent, but you look at the technicals and you go, well, where would you put your stop? You always put your stop behind structure, but these stops have been blown well and truly out of the water, gone quite a way through the structure area before then returning back to strength of the dollar. So definitely the best way of trading this was sit on your hands and wait for the market to come back to you. Now the Nikkei is interesting because we do have a little structure level in here around 17.4 to 17,500, and then we have this reversal pattern, rising wedge forming after a double top. So if we get a close below the bottom of the rising wedge and a close below the neckline here, could show bearish sentiment here, but this is something I'd like to see play out. So I think initially we'll be looking for a close below, lower close, which isn't really going to happen because of the length of this candle. So I'd want to see a bit more commitment of close below this neckline, and then we're going to look for potential retest to get short. Or are we going to see intervention from the Bank of Japan, in which case if we do, then we'd expect to see the 17,500 barrier break. So I need to see some commitment to the upside if we're going to go long, which longs I want to see a break of 17.5, and then shorts obviously we're looking at a close below the neckline here, and then we'll look to get short on any sort of retest of structure. Okay, so that's it from the presidential update today. We're going to see more from the markets over the coming days. Remember, Friday is a US bank holiday. So traders, what I'd advise is take the rest of the week out, let this dust settle, see how the markets play out, and then come back Monday and let's see where the market's at. Let's take a direction, pick out all your interesting structure levels, which will be quite a way away now after these huge moves. So it's going to take some time. So just be patient and don't basically ruin your year's trading now by trying to chase the market. Okay. All right. Well, listen. Have a great day, and we'll be back tomorrow, bright and early. And enjoy the rest of your day. Bye bye.